Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind company reports, and I have a feeling we might be dealing with a bit of an old magic trick today with Cenntro Incorporated. So buckle up. So what exactly is going on with Cenntro Incorporated? Well, it looks like they have a bit of a financial chess match happening. They entered into an agreement back on the 23rd of October 2025. A big fancy exchange agreement. What does that mean in plain English? It means they were swapping out an old debt for a new one, essentially. They had this senior secured convertible note. That's like a loan that could also be turned into company stock. This note kept getting its maturity date pushed back, which is like moving the goalposts for when it had to be fully paid back. The latest it was due was January 2026. Now the exciting part is what they got in exchange for this old note. They issued a brand new note, also convertible, this time for $4 million. Think of it as them taking on a new, slightly different loan. This new loan also matures in January 2026, so they basically traded one short-term debt for another. The interest rate on this new loan is 8% per year, pretty standard stuff. But here is where it gets a little spicy if they default, meaning they don't pay as agreed. The interest rate could jump up to 10% or even higher if the law allows, and if they don't fix the default, the lender could demand all the money back immediately, plus an extra 10%. That is a pretty good incentive for Cenntro Incorporated to keep their payments on time. Now let's talk about how this whole swap was done. They are saying this was done under an exemption. Basically, they are saying they didn't need to go through the usual hoops to register with the government because they were just dealing with an existing debt holder already. They basically exchanged a debt for a new debt with the same party. And then things get really interesting. As of the date of this report, this about PTE person or company, they've already converted this new $4 million note into shares of Cenntro Incorporated stock. They converted the whole thing basically and got themselves 12 million shares of common stock. So that $4 million loan for them turned into owning a significant chunk of the company. It's like they lent money and then decided buying the company was a better deal. This is important because it tells us about the company's ownership structure and how easy it is for debt holders to become shareholders. For Cenntro Incorporated, it seems quite straightforward. The stock is traded on the Nasdaq, which is a major stock exchange, so it's accessible to many investors. The par value of the common stock is a tiny fraction of a cent, which is typical for many companies, and doesn't really reflect the market price. Now, the actual paperwork for this deal, the exchange note and the exchange agreement are filed with this report. Think of these as the official contracts. Filing them is basically the company saying, here is exactly what we promised each other. It lets everyone see the nitty-gritty details. Also, it is worth noting that Cenntro Incorporated is identified as an emerging growth company. This means they get to follow some slightly simpler rules for reporting their financial information compared to larger, more established companies. They haven't elected to opt out of the extended transition period for new accounting standards, which means they can continue to use the older accounting rules for a bit longer. So what is the big story here? Cenntro Incorporated is actively managing its debt. They are essentially refinancing, but in a way that allows their lender to become a shareholder. This $4 million debt may have been a stopgap, and the conversion into stock suggests the lender saw more value in owning a piece of the company than just getting their money back. It is a potential sign of confidence in the company's future, or it could simply be a strategic move by the investor to gain influence. The key takeaway is that this transaction has added to the company's share count, which can dilute the ownership of existing shareholders if not matched by an increase in company value. We'll need to see how this influx of stock ownership impacts Cenntro's future performance. The company is navigating its financial landscape actively, and for investors, keeping an eye on how these convertible notes are handled is crucial. It's a strategic dance between debt and equity, alright? That's our breakdown of Cenntro Incorporated's recent filing. What is your take on this debt to equity swap? Drop your thoughts in the comments below and let us know what you think about the company's direction. If you found this analysis helpful, please hit that like button. It really helps us out. And if you want more deep dives into corporate filings, make sure you're subscribed. Also, don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.